I'm Allison Corbin with Big Sky Economic Development. Today I'm joined by Patrick Barkey with the Business Bureau of Economic Research. So we'll be discussing the economic impacts of COVID-19 to our area today. So I'd like to thank you, Patrick Barkey, for joining us today and providing us with your infinite wisdom and analysis on the economic conditions and what you're seeing in the data and information to help inform us on how our economy is doing and how we, what we need to be looking for moving forward. So I'll turn it over to you.
Well, thank you, Allison and Dustin, and welcome everybody. I'm here to talk about the outcome of some analysis that we've done. And just before I get going, let me just check, Allison, really quickly. Is this showing up okay? Okay, thank you. So our research center has conducted some analysis, and we just updated it again this week. So I have some rather fresh findings to share with you on what the pandemic is doing to the state. Our research center is focused on helping Montanans understand the economic environment in which we live and work. And boy, there's a lot of things we need to understand today. I also have a message which is pretty negative. I think there's reasons for optimism, but they're not right now. Right now we're in a very tough economic situation. So first, I want to thank Northwestern Energy for supporting this research. All findings are ours, but they did support this research, and we're very grateful. Let me just start out with a quick graph, okay? If you've seen the Economic Outlook programs that we do, and we did in Billings in early February at the Northern and around the state, we talk in graphs. That's what we do. We like to show the numbers on the economy. And when you do look at the, quote, numbers on the economy, depending on which number you choose, you get a picture that looks something like this. This is employment in Montana going right through March. March happens to be the most recent data we have. And you see the immediate problem with this data, and that is it doesn't say anything about the COVID pandemic. In fact, Montana was one of 3 states, I believe, in March that showed no employment decline. A lot of reasons for that. One big reason, which I'm not going to emphasize too much, is that this data tend to be a little less reliable. They tend to get revised over time, so the last data points are not too reliable. But this is a big problem with data in that it's not really telling us anything. We're all looking to find out what's going on with the economy, and we're presented with pictures like this. If I were to put up the Yellowstone County employment data, it'd be much the same. You have a different dynamic there, not quite as smooth a growth as I'm showing here. But again, the story would be the same. There's no COVID to be seen in the official employment data that we have. There's another piece of data here that I've been waiting very patiently to have come out, and that's the tax collections from the state of Montana. Now, this is not labeled. This is actually a very informative graph. It's not labeled too well. I just got it this morning, so I wasn't able to really do a better job. But this is the income tax collections by the state of Montana over the first 10 months of the fiscal year. So April is the 10th month of the fiscal year, just 2 months left after this. So that's not October, that's numbered in the fiscal year. But you can see the monthly collections, and about the only thing you notice from this graph is that unlike fiscal 19, when there was the usual run-up in collections in the early winter as people paid their tax liabilities, and then the negative collections, if you will, as the state made refunds, that cycle is gone because the governor pushed back the due date for filing taxes for personal income tax. But you're still not seeing COVID. Even in the April income tax collection data, COVID is not quite showing up yet. This one's a little bit more of a head scratcher, but believe me, it will show up. So what do we have for data? Well, we have data, and this data has gotten a lot of attention. This is something which requires some explanation. It is Montana data, and it is weekly data. So there's it goes all the way back to 1996. It's unemployment claims. So as people get laid off in the summer and they're hired back, or excuse me, peaking in the summer, I think we're peaking in the winter, and in the just after Christmas is when this peaks. But you can see that this cycle, which increased in the Great Recession, you can see that in the middle of this graph, really not much going on, except for whoops, maybe there is something going on. So in the weekly data, we do see this gigantic event occurring, which you've heard about in the media. The number of Montanans filing for unemployment is incredibly high number. So finally, we have a piece of data which shows COVID having an impact on the economy as measured by the data that we have, but it's rather incomplete. So what we did in our center is we jumped into this because right now we're dealing in what I would consider to be an information void when it comes to the economy. We know something bad is happening to the economy, but we really don't know how bad, and we haven't had that translated into things that we can get our head around. So what we did is we jumped into this and we did an analysis where what we did essentially is we compared the forecast pre-COVID. So the forecast that we presented around the state, we made in December of 2019. COVID was not a factor in there. We might have mentioned it as a risk, but we certainly didn't incorporate anything like what's happened. And then compare that to projections made more recently. I say May 2020 for the one I updated this week. So this is very much a risky business. This is something that normally our center would not do. I say normally because we're a little more comfortable making a forecast when we know where we are. As I said, we don't have a lot of information, but nonetheless, people need to know. So we decided to jump into this stormy sea of what's going on in terms of the economy and make these projections. So what we're trying to do is to give some insight on the magnitude of these impacts. And I think you're going to see that they're very large. We're certainly not going to be spared the pain of this downturn. Whether things turn out exactly as we're projecting is something I'm less confident of, but there's no question that we're in the midst of a major economic event that is not going to spare any part of the state, nor will it spare any part of the country for that matter. So let me just start by talking about the U.S. economy. So the old forecast for the U.S. economy was rather bland and boring. In fact, this kind of graph is rarely even shown. This is a graph of the economic output of the U.S. GDP, gross domestic product as it's measured. It's a big number. It's in the tens of trillions of dollars. And you can see it grew since the Great Recession. And the projection, which is to the right of this graph, that was made in December 19, was that the economy would continue to grow in the coming years. That's obviously changed. So a national forecasting firm, IHS Markit, which happens to be the forecasting firm that the state of Montana subscribes to, made this prediction in April. So this prediction is about a month old, and it's rather stunning, all right? It shows a sizable downturn in the economy happening right now, this year, 2020. The magnitude of that downturn, as you can see, it is much larger, much more severe, much more rapid than anything that occurred in the Great Recession. So it was a downturn in April, projected to be about a 5.5% decline in GDP average for the entire year 2020, which included an extremely large drop right now in the second quarter and some improvement as we get to the end of the year. The encouraging thing about this forecast, if there's anything encouraging about it, is it did say that after 2 years, so by year 2022, we would have some catch-up growth in the U.S. economy, and we get back fairly close to the trend. Not exactly there, but pretty close. So it looked to be a very harsh downturn, possibly with a robust recovery that would, by the standards of past recessions, be fairly rapid. I invite you to look, if you'd like, at that graph that occurred back in the Great Recession. It took much, much longer for the economy to get back to anything resembling the growth we had before. Unfortunately, things have now changed. So since April, we've gotten some new information, and they really fall into a couple categories. First piece of information we've got is we actually have data on what the U.S. economy did in the first 3 months of the year. It came in, as you know, at about a -4.5%. That's an annualized rate, by the way. I'll get more to that in a second. But a negative growth. And furthermore, we got some more insights in what consumers were actually doing, not what we assumed they were doing, but what they were actually doing in the first quarter of the year. And what we found out was that the blows that were being felt by the transportation industry, and in fact by the healthcare industry, were much more severe than originally forecast. And finally, we had the oil upheaval. So the big downgrade for the prospects for oil, all of the issues that have to do with the shutting down of production and the consequences for oil producing areas such as ours were pretty dire. So the new forecast is worse. The new forecast, which just came out earlier this week, now calls for about a 7.4% decline in U.S. growth, and also has a slower trajectory of growth coming out. So this is pretty ugly. There's no question about it. I want you to take two conclusions from this, if you will. And the first one is that, oh my gosh, this is a big event. Yes, this is the biggest downturn in our lifetime, certainly biggest downturn since World War II. I'll let the historians go farther back than that, okay? The second thing I'd like you to take from that is to say, look at this. In the space of 1 month, forecasters have changed their mind a lot. And what that tells you, which is you can take this as being optimistic or pessimistic, is this is an extremely fluid situation. And assessments are changing rapidly and significantly. And so I'm not sure where we're going to end up. This is the best information we have today on the U.S. economy. Let me give you a little more flavor of this. If you look at what U.S. consumption patterns are projected to be for the full calendar year 2020 compared to the old projection, you can see the obvious targets there. On-premise food, restaurants, clothing, recreation, discretionary items, huge double-digit declines in consumer spending. In many cases, those are very, very big dollar amounts. Finally, when you get to the bottom of the graph, you can see in this portrayal, at least, there was a bump up in grocery stores. There was projected to be mild increases for some of the sectors you can see, which include healthcare. The new data came out, and this was changed. There's a lot of things changing in this graph when I flip this next slide. I just want you to note two. The two is that now there's a very negative assessment of healthcare because discretionary healthcare has been hammered. It's been hammered very hard, and that's a very big number to be hammered hard. And also transportation services, primarily that's airlines, that have just cratered. And so you put those two things in there and you get this difference. I'm just going to go back and forth here for a second. A lot of other things have changed, but those are the big changes. The downward revision in the expectation of consumer spending for transportation, for healthcare. Okay, enough about the U.S. What about the Montana economy? Again, there's a projection for the Montana economy here. I'm not showing GDP, I'm showing total employment. And let me just pause here for a second. This is a bit of a technical point, but I want to make this point in case any of you are aware that this is a slightly different way of counting jobs than is often done. The most commonly used employment concept is what's called payroll employment. It's people who are on a payroll, who get a paycheck, have deductions, etc. Okay, that number hovers around 450,000 in the state of Montana. This number is much larger than that because it includes, in addition to payroll employment, it includes self-employed, it includes proprietors, it includes contract workers, it includes gig workers, it includes anybody, non-employee people who get compensation, so consultants, etc. So there's undoubtedly some double counting in here, as you can compare a number like 640 million to the 1.1 million, give or take, in the Montana population. But this is a more complete rendering of what's going on in the economy. So again, there's the pre-COVID forecast, and now here is post-COVID. So as of April, again, a fairly steep decline, a decline which is, again, in the case of Montana in April, projected to be much more severe than the Great Recession, with some anticipation of makeup growth in 21 and 22, getting us closer to what had been projected to be a declining trend, a slowdown in overall job growth, which of course has now turned into an outright reversal that we're living today. Now, I want to say one more thing about this, and that is that the numbers that I'm going to show you are annual estimates. So when you look at a job number for 2020, it is an average of the entire year. So job declines will likely and already have overshot this number. This happens to be a 50,000 job decline. That's about 7% of this employment measure I'm using. Job losses in the second quarter will overshoot that, but there's an expectation of some improvement. But let me go right to the May number. The May number is worse. The May number is worse in both ways, just like the US. It's looking like more like a 75,000 job loss, which is north of 11%. And you can see that that rate of growth coming back out of that deeper hole is not sufficient to close the gap, even by year 2022. So it's going to be a longer lived event than was originally projected. Again, it's a very serious finding, and I think a projection we should be paying attention to. But you'll note how much this projection has changed in the space of a month. And that, again, speaks to the considerable unknowns involved in making these kinds of projections. Let me go to something that's a little more, a little bit closer to what folks can relate to, in the sense, especially those of you that work for state government and have a stake in how the fiscal solvency, if you will, of state government. This is looking at the projection for personal income in Montana. I'm putting all three lines up here at once so I don't bring these up one at a time like I did before. Obviously, the old projection, continued growth. What is that number? Well, that number is, you can see it was, right now it's north of $50 billion, and it was projected to grow, as you can see. In the case, I've done something different than what we normally do in our economic outlook events, and that is I'm putting this up in before inflation. This is not a inflation corrected number. This is the nominal number. So the reason why I'm doing this, of course, is that if you think about where we stand as a state in terms of how we operate in state government, we're an income tax state. We have plenty of other taxes, but in terms of general fund revenues, more than half come from the personal income tax. This is not exactly equal to the income tax base, but it is pretty close. Capital gains and some of these other things are treated differently. Government transfer payments. There's technical reasons why this doesn't equate dollar for dollar to the tax base of the state of Montana, but the big pieces are in here. So what is this saying? Well, it's saying that we're going to see a fairly sizable decline in personal income, which is the income received by Montana households, includes income from your job, which is about 70% of that, as well as so-called unearned income, which is dividends, interest, rent, and the kinds of financial income, property income, and so forth. Government transfers are in there as well. All those things have been disrupted by the COVID downturn, clearly. What is that downturn? Well, that again is north of 10% in terms of a decline in personal income for 2020, and a considerable shortfall between what was originally projected and now where we expect to be for the next 2 years. So that's really a considerable challenge for state government at a time when there's heavy calls on resources. The tax base is clearly going to be challenged in terms of producing the kind of revenue to keep all the things that state government is doing afloat. And again, you can see that downwardly revised projection. So that's all state of Montana stuff, right? Getting a little closer to home will be to take a look at some of the individual industry effects. And again, I'm switching back now to talk about employment. And I'm talking about employment in a whole bunch of industries, so it's a pretty long list. And what this graph is trying to show, just for the 1 year, 2020, because that's the trough here, okay? I'm taking a look at the difference in what was originally projected for all these industries and what we're now projecting, although actually I'm pausing here for April. 2020. And there's some clear patterns here. There's a lot of industries here. You can't go through them all. The first pattern is that they're almost all negative, unsurprisingly. The only one that's a little positive is federal civilian employment. I guess when you spend an extra $2.7 trillion, you do get a few more federal employees. So there you go. But state and local government negative, and lots of others negative. The big bars there, of course, are the labor-intensive and tourist-related industries, which are just getting killed right now. Accommodations and food services, arts, entertainment, recreation. Those are job declines, retail trade, even some declines in construction. Now that was as of April. All right. In May, those got revised and they got worse. And the big difference here is, and I'm not sure I believe this or not, but the projection now calls for significant declines in healthcare. We produce a lot of forecasts in our shop, and I show them to you. In normal circumstances, I might wait on this one for a while and wait till the situation stabilized itself a little bit more. But the current thinking is the cratering in healthcare that occurred in the first quarter of the year translates into a pretty significant challenge for healthcare providers, not just hospitals, but healthcare providers of all kinds that didn't show up in the April numbers. And you can see some of the other declines. Now those declines have actually extended to agriculture somewhat. And these, I think the explanation for this has to do more with supply chain effects. I mean, clearly COVID's not going to affect the weather. It's not going to affect yields, but it's going to affect markets. It's going to affect prices. It's clearly affecting international trade. And so there's a little more pessimism there, just a little bit more. It's not as affected as many other industries, but you can see where things stand. So that gives some insight. What's it say about mining? Not very much. Utilities pretty stable. A lot of other, what I was saying with Allison earlier, talking about the second wave, not second wave of infections, the second wave of economic events that are occurring as the shock that's occurred to so many industries like airlines and tourist industries and so forth reverberates into other pieces of the economy that those industries do business with. And I think we're learning that the hard way right now. The regional impacts of this is as close as I get to Billings. I'm happy to talk more about Billings in the Q&A. Most of that would be my speculation. Maybe I would like to use this event as learning more from you as to what you're seeing, because I'm reporting to you what I know, and it would be great to hear a little bit about what you know as well. You can see that these job declines for 2020, again, there's a basic story here. These are all in thousands, by the way, so these aren't percents, these are in thousands. So what that's saying is that the Northwest region is defined by the blue counties on this map are expected to have the most severe job losses, about 25,000 fewer jobs in the year 2020 over the calendar year average than occurred than was in the earlier projection. So the first conclusion I make of this graph is that there's no part of the state is spared. All these areas have significant job losses because of this downturn. You can clearly see that some regions have more job losses than others. In some ways, this simply reflects the number of jobs. So Northwest is the most populous part of the state, at least as it's divided here, and has the highest number of jobs. So in some way, it's understandable that the numbers of jobs lost would be more significant. It also reflects the industry mix. Northwest and Southwest part of the state are going to be more heavily impacted by the declines in travel and to some extent healthcare. You can see South Central is the second hardest hit, although the numbers are down in Eastern Montana having the fewest number of jobs hit, but they also have the fewest number of jobs total. So in percentage terms, they're not getting off that easy as this one would suggest. So this has been an attempt to bring you the information I have. I will just say briefly that you can get a version of this study, which is still being revised for the May data. That revision is not on the website yet. but there's a more complete explanation of this research at this website, and that's just our website with a link directly to the study. If you don't want to remember all that, just remember the very first part of that. And when you bring up our homepage, you'll see a banner that you can click on that'll take you right to the study. So I just want to sort of back my chair up, because this is my last slide here. I want to back my chair up just a little bit here and just give you some perspective on what I think this all means, and what it is I've done here, and what, if anything, you can take from it that's of value. So I think in one sense what I've done, and I should say we've done, because it's our whole team at BBER that produced this, I'm the one explaining it. What we've done here is something that a lot of groups are doing, and not just in economics, but in all kinds of areas. We are all stumbling around in the dark because we don't have a lot of information. And so what we are doing is we are using models to try to make predictions. So we've clearly heard a lot about models when it comes to epidemiological situations. I mean, we almost know the names of some of these models. They've been talked about so much in terms of the models and their shortcomings and their prediction errors and what the predictions are and so forth. I have a great deal of respect for modelers, but I do have a lot of appreciation for their shortcomings. And so what I want to present to you is the fact that in this information void, we don't know how bad it is in Montana quite yet. But I think the most confidence I have in all these findings I'm sharing with you is how far we're going to fall. I think that the data are the partial data we do have are very much in agreement with the fact that we're looking at something that could be as much as 10% job declines, at least for a part of the year in 2020. You can see that, for example, from those unemployment claims numbers I showed you, which have shot up past 60,000 already, and that's just through April. So I think the model is really confirming what we can see. The less confidence I have is in terms of what's the bounce back. I mean, obviously, national policy is in high gear for spending and injecting liquidity and trying with everything from the Paycheck Protection Program to some of the extraordinary lending activities conducted by the Federal Reserve, is trying to bridge the gap between a free-falling economy and the economy which has put the crisis behind it and is at least positioned for growth, and trying to keep jobs and businesses alive and viable going forward. So we have less confidence about that, but we always have less confidence about the future. I share this with you as a means of trying to get a grip on how big this problem is in terms of exactly where we're going and when we're going to get there. I have less confidence, but I do have confidence that we're going to grow again. When we do grow, it'll be robust growth, but it might take us a while to get back on trend. So also, I'm going to turn it back over to you, because that is the end. And I can either leave this slide up, or we can look at our beautiful faces, whichever you want to do.
All right, I think we can pop back to your beautiful face.
Okay.
But I've got some great questions going here in the chat, but I wanted to start with one that is just a general conversation about the behavior of the decline in the economy. And, you know, a lot of thought has been put into, will this behave like a natural disaster? Will this be a full-blown recession? And I noticed in your chart, you know, there's that sharp V to this because of the, you know, the sudden closure. And then there's still some pretty rapid incline once we reach the bottom. So can you talk about how you are looking at the modeling of that recovery? Are you looking at models that are disaster related? Just a little bit of the methodology or thought that you put into how you weigh those two different dynamics in this situation.
Well, there's two things. One is that it depends a lot on the national forecast. And the national forecast we got from IHS Markit, but I know a lot. I talk to those people all the time. I know a lot of things that went into that projection. So there is no epidemiological model inside an economic model. So that projection is made based on past pandemics. All right. What else can you do? I guess would be, I have a lot of sympathy for that. So the attempt is to try to look at how those have played out, not just the Spanish flu situation, but also the smaller pandemics, not just in the U.S., but in other parts of the country. So, and they are consistent with a pretty robust resumption of growth. There's more assumptions in there than that. I can go into it more, but one thing I will say is that you have to remember on that graph, pictures can be deceiving, all right? That graph shows annual data. So there's one dot for 2020 and there's one dot for 2021. We don't live that way. We live day to day these days, or quarter to quarter. And and I have to do that because our model is only an annual model. So there's a technical reason why I can't tell you all the intricacies of what's happening within the years. But for quarterly pattern, it looks like an incredibly steep, I mean, amazingly steep decline right now in the second quarter, something that's just, I would share with everyone on this call, but I would want to have you all sign something that says you're not going to, do something rash when I tell you that number. But it's going to be a number like negative 30%. I mean, just a huge number. By the way, that's an annualized number. That means if the economy were to grow at that rate, it experienced in the second quarter for our entire year, that's how much we would decline. So it's more like about an 8% decline. But anyway, getting back to it, huge decline in the second quarter, a little bit of movement up or maybe sideways in the third quarter, and then 6 to 7% growth in the fourth quarter from a very deep hole. So that's what the pattern looks like. So it's not quite going to bounce back. We're looking at a good 6 months, which we're already well into, of a very depressed economic activity.
Thank you. All right, this first question is from Steve Arbescow, and he's asking about really the graying of Montana. That's been a theme that you've touched on in past presentations. He's asking, will some of these job losses just not rematerialize? Will these jobs not come back? So do you believe this might reset our total employment base?
There's two ways to answer that question. The job total will come back. All right, it always has, and it always will. It's usually a pretty safe bet for growth in the U.S. economy, and particularly for Montana economy in the Mountain West, and particularly for billings. Okay, that doesn't mean the individual jobs that have been lost will come back. Like what happened in the Great Recession, like what's happened in every recession, is jobs go away permanently, and people have to find other opportunities. Mm-hmm. It's really tragic. I couldn't, if we could somehow manage the economy so that didn't happen, a lot of people would be happy, but we wouldn't. It's not the way it works. So there will be some definite hardship, not just for employees, but for businesses as well. There will be businesses are in the same boat. There are businesses that will fail, that will come back, and there'll be those that will not, that won't come back, and there'll be those that can weather it. And how does that mean we have less business? No, it means that we find other opportunities, and we put our resources to productive use, but we go through this very difficult period of transitioning, which is not very pleasant.
Thank you. This next question is from Jeremy, and he says, great information. Thank you, Patrick. So his question is, our federal government, our country, has invested over $3 trillion in economic recovery dollars thus far. The Federal Reserve Chair says he believes the national economy needs additional stimulus, as he's worried that the upcoming recession is worse than first anticipated. What are your thoughts on additional recovery dollars, and where in Montana's economy would we see positive changes if more stimulus were distributed?
Yeah. First off, I hate that word stimulus, but I'm not gonna put it back in the bottle because everybody uses it. What we're really doing is income support. I mean, we're not really expecting people we give money to are just going to go buy things and stimulate business. They're just going to pay their rent, you know, and they're going to make their debt payments and things like that. So I think that, you know, I think it's, I actually agree with the Fed chair, although it's frightening how much we're spending and how much we're borrowing. But the size of the challenge is pretty large. So let me just comment on that first about what the size of the federal help should be. The federal government does have the capacity to borrow. It's kind of amazing, but it's true. I mean, interest rate, 10-year bond rates are what, 0.7%? I mean, it's incredible. Lock up your money for, you know, but that's the world in which we're in. So they do have the capacity to borrow, whether they should or not. I'm going to punt on that question for the moment. So what can they do? Let me make another point. I think Ben Bernanke, who I think may not be the most popular person, maybe not he's the most popular person in Billings, but I think he's one of the better Fed chairs we ever had, because if there's anything we learned in the Great Recession, it's better to spill some, what was that, breaking eggs, making omelets, spilling milk, whatever those cliches are. Yeah, you're going to spend a lot of money, and there's going to be big companies that get it that shouldn't be. There's going to be so many gotcha news stories out there about wasteful spending. But better to have those and get the money out there than to pull back and to wait and to take all the time to design a politically bulletproof program that won't get anybody in trouble but doesn't do much for the economy. I think a lot of the research in the Great Recession has shown that doing the second thing was not a good step. It's better to take the political heat for the kind of chaos and the kind of stories that we'll all be reading. So what kind of things can be done? I think clearly that the best thing that can be done, unfortunately, it seems to be politically the hardest thing to do, is to keep businesses viable, because businesses are what give people jobs. It's no use supporting households, helping them live without jobs, as of course we always do as the economy. We're a compassionate society, we do that. But in terms of the economy, there's no use doing that if there's no jobs to come back to when you get there, because the business is gone. The business can't come back. So I think that's clearly the challenge. I think we're doing more of that than we ever have. And I think that's exactly what we need to be doing. I would say one last thing, and this seems like a no-brainer, but it's sort of what not to do, all right? and what you don't want to do is fall into the same trap that we did before, which is where, oh my gosh, we're spending money, let's run like you know what to get to the front of that parade and get our favorite project out there. So this is not the time, I hate to say it, but it's not the time for infrastructure. It takes too long, okay? It's not supporting the businesses that are failing right now. That's my opinion. Other people on this call may have different opinions. It's too slow to happen. What we really need to do is we need to help those tour boat operators who are closing for the year and may never come back because there's no business this summer. And you know, when next summer comes around, are they going to be there? Is the Montana tourism industry going to be there to accommodate a rebound, et cetera? So lots of problems with that. I agree. You know, government's picking winners and losers and all that sort of stuff. A lot of philosophical issues with all of that. But I personally, king for the day, I'm willing to deal with those problems and swallow the bitter medicine that it sometimes serves up to us, because that's what we need to bridge ourselves forward to get to survive until we get back to growth.
Absolutely. One point of clarification, do your forecasts of reduced income take into account federal cash transfers to Montanans, including the CARES Act, et cetera?
Yes, they do. And they also, what's even a little more troubling is a lot of those benefits are not taxable. So in some cases, the hit to personal income that I'm showing it actually makes things look a little better than otherwise would for the respect to state government personal income tax.
And thank you to Casey Williams for that question. Another great question. This is from Mike Nelson. This is one I look forward to hearing the answer on. So the PPP money starts running out on June 1st. Do you foresee another spike in unemployment then? So as people leave the PPP program.
That has gotten very complicated. And the short short answer is I expect something to happen to replenish that program. I'm not sure what. Not sure what political bargain would have to be struck to make that happen. But clearly the gears are already turning to do something. So I don't think it's going to run out. But if it were to run out, what makes the unemployment question more complicated is one of the ugly things we've done, unfortunately, and most people on this call probably know this, is in many cases we've actually made it more worthwhile for folks to stay home because the benefits can be fairly generous, and so that complicates the unemployment picture, right? That's kind of artificial unemployment, right? Your job is there, but you don't want to take it yet because you're up north, you're in your cabin and you're making money, So I'm not making light of that, but I'm just saying that complicates what happens on unemployment, because now unemployment itself is affected directly by policy. What people choose to do has been impacted. But I see the PPP as being something that's going to help businesses stay afloat, which is it's indirectly going to factor in unemployment. But I'm not sure. It's gotten really murky how that's going to work now.
Thanks. Another question from Steve Arviskow. So here in Billings, our hospital system didn't have to lay off or furlough employees. And so his question is, would we still be looking at cuts in healthcare jobs in Billings? So it's a huge part of our GDP, as you know, we've covered that before. So what do you kind of see the shakeout being of the job loss or impact to healthcare? And is it just to the hospitals, or do you see it trickling down the line to those smaller providers in our economy?
In a way, it's kind of unknown territory, right? We typically don't see recessions impact hospitals, at least in this directive way. It impacts their, the bad debt and things like that. But in terms of whether does it make them shrink and contract like construction or some other more sensitive sector would do, typically not. But I'll say this about healthcare: the implication of this forecast. I'm not saying this forecast is right. I mean, I looked at that healthcare swing just between April and May is a real eye opener. I mean, they're all of a sudden moving healthcare right over with manufacturing, construction, and some of these other areas that usually bear the brunt of recessions. And that's but what that's saying is that there's more hits coming for healthcare if that's true. And the reason for the downgrade is looking at how consumers have been spending their money. Discretionary health care, and it's everything from preventative health care screenings, ordinary doctor visits. It's going to be, if that kind of hard hit that we saw in the first quarter to healthcare spending, if that continues through this year, I can't see any healthcare center being able to hold the line on its headcount with that kind of hit. I hope it doesn't happen, but that's the implication of how things have evolved so far.
Absolutely. So this question is from Dan Carter, and this is really around tourism in the state of Montana, and that's a huge part of our economy as well. But Dan asked, Yellowstone National Park is scheduled to reopen soon, at least on the Wyoming side. If and when the Montana gates open, what effect will that have on seasonal employment?
Well, I think, unfortunately, a lot of decisions are being made for tourism industry right now. And what I mean by that is it's both tourists and tourist businesses. So tourists are making up their mind, if it's safe to travel. I think most of them don't think it is. That's pretty obvious. I mean, look at the TSA screening numbers. I mean, they're stunning. Even the restaurants, and of course that reflects the shutdown, but airlines haven't been shut down. I mean, if you want to travel and you can find a flight, you can do it. So clearly that's consumer preference happening there. So I think what's happening is that we're starting to see almost too many things baked in to the tourism economy of Montana, particularly for out-of-state and certainly for international visitors. That's already happening right now. On the consumer side, it's the plans that are being made. And doesn't 2021 look like a better year to go to Yellowstone? That kind of question. But it's also on the business side, right? So you have the outfitters, the guides, and so it doesn't mean that we're not going to grow from where we are right now, but let's face it, April, May is typically a low point anyway. Sure, we're going to see growth, but tourism is just has a bullseye on it. I'm afraid. I wish it were otherwise. For any kind of bounce back this summer, there's some real challenges there. I hope I'm wrong, but I'm seeing projections. 50% declines, and some are north of that. So I forecast a lot of things. I don't dive into the tourism industry and understand every aspect of it, but there certainly is a lot of people out there that do. I read it, and so that's I think that's a reasonable if somewhat dismal forecast.
Great. Thank you. So Sharon Peterson had a question just about how you take age and the fact that Montana has an older population into factor in this modeling of how our economy is impacted.
Well, actually, it's mostly good at the moment. Older Montanans, and of course, by definition, an older Montana is anyone who's older than you, right? But so we'll leave off what that means. Older Montana, you can all make up your own definition. But older Montanans are asset rich and income poor. So certainly the stock market tribulations are going to impact you. But what I'm saying is that if you have income and assets that aren't directly tied to a business that you run because you're retired, or if you're in agriculture and maybe that's a little less affected. I mean, and furthermore, I mean, the oldest part of Montana, I'm still not saying what's old, is eastern Montana, right? And eastern Montana has got 0 infections. I mean, you could even argue that eastern Montana could benefit from this eventually, because people are going to say, it's not so bad living in a place where there aren't any people. And I don't take that the wrong way. I know there are people in eastern Montana, but not as many people. The New Yorkers would say there aren't any people. I think clearly this has not been a very kind epidemiological event for older people who are certainly have had higher challenges, shall we say, to put it mildly, from the virus. But that's the same place every place, right? So I don't think our age in this case does. I think what's hurting Montana, and by the way, everyone's hurt, and by some scores, Montana's going to get off a lot better than some other states. I think one thing that hurts Montana is how far away we are, and travel being one of the things most disrupted by the distancing is something that does single us out for a little more pain than other areas.
To that point, how do you, we have all these national trends and the national data, and it's how we've been going from a health perspective is very different than many places in the United States. Like I was just comparing, where my parents live in Colorado, in their county alone, in Colorado, they have as many infections as the state of Montana. So how do you work through the different experience on the health side when modeling the economic impact side?
Well, it hasn't been the virus directly that has impacted the economy. That sounds like a very strange thing to say. But we've had a fairly low number of deaths. Right now, we have a very low number of people who are actually infected. Numbers will change. I mean, but it's been people's behavior, right? Part of that is it's our behavior. It's what there's a restaurant open in Missoula. My wife doesn't want to go to a restaurant yet, so we're not going to go. That's behavior, okay? Another part of it is clearly the mandates, or whatever you want to call the governor's orders, county health officers, all the kinds of administrative. I'm not a legal guy, so I don't know what they're called, but the pronouncements, thou shalt not X, whatever it is. So that's that between that, and not just here, by the way, everywhere, right? So it's been really 3 things. By the way, there's one we haven't talked about much. The one is the distancing, whether it's required or whether it's consumers consumers want to do. So distancing is just throwing a monkey wrench into all kinds of things that businesses would normally do, be it work together or play together. A second thing, which is less obvious, but you're going to see it big time. You're already seeing it in the meat markets, meat coolers and the grocery stores. There's a lot of supply disruptions. I mean, there are a lot of things that are impacted. A lot of ordinary folks don't know about this because we're not business owners. I would think that in Billings, Montana, there are a lot of people that know what kind of strain, if not outright ruptures, there have been in supply chains. The third, of course, is energy. The cratering of oil, the brief oil price war, which has given way to just an extraordinary situation in oil markets, is something that Montana didn't need, and yet we're getting it. It's those three things together, and it's a lot of that can change pretty quickly, but that's why Montana, even though our counts are way down from Colorado, we watch the same news feeds, we watch the same internet feeds. We look at that map from Johns Hopkins like everybody else with all those red bubbles everywhere, and they get bigger, and we're worried, and our behavior is adjusts accordingly.
All right, our final question today from Steve Simonson. What opportunities do you see in this economic situation today and in the near future? So looking at the glass half full.
Yeah, no, there's been plenty of them, and there's not enough time to address this, and it's too bad. I think there's been some real winners in this whole situation, and I think there's been a lot of learning that has taken place. Just to give you one, just very broadly, tech has been an enormous winner in this. Everything tech. We're all on Zoom. My father-in-law is getting his groceries online. My father-in-law, he hardly knew how to turn his computer on. He's getting his groceries online. The expansion of that footprint of tech, which has always been growing anyway, it's grown by leaps and bounds. And by the way, by and large, tech has worked. And it's proven, even something like Amazon, which has been bashed right and left by everyone, they're hiring. Do you know how many other companies are hiring? Not many. So that's been a big winner. Lots of opportunity there. Lots of opportunity in education and communication. Maybe all of our kids in middle school should be should be schooled online. I don't know about that. But there's higher ed is getting a real shake-up. Pretty scary for somebody like me that spent most of my career working here. But there are some real opportunities in how things are delivered. I think there's clearly some recognition that we need to be more resilient as an economy, not just talk about it, but we need to actually be more resilient as an economy. And I think that opens up a lot of opportunity for America to produce some of more of our own stuff for that reason. So I'm optimistic. I think we've also learned. Here's another reason to be optimistic. I'm talking too long now, but I think there's a lot of good things to be said here. I'm just going to editorialize for just a moment because I think I think we've learned that the shortcomings of what you might call our regulatory state. The failure of these institutions like the CDC to really move when they needed to move is appalling. And I think you see places like New York State temporarily lifting restrictions on healthcare, allowing doctors to practice across state borders. Now, I'm not going to get into all these kinds of regulations, but there could possibly be, I'm hopeful, some sort of realization that the regulatory pendulum could usefully be throttled back because the regulations have cost us time in this epidemic, and that has been unbelievably expensive.
All right, one more question snuck in, and we do have like 2 minutes. So from Charlie Yegan, based on the low infection rates in Montana and the ability of people to work remotely in many industries, might we reasonably expect to see an increase in in-migration to Montana?
Yes, I certainly do. I think, and the question is, what are Montanans going to make of that? Because it, it it could, from people outside of Montana, Billings looks like a small town. So, maybe Billings is going to be, I think there's really something to be said for that. I think there has already been a marked decrease in population of the 12 largest counties in the country, which are the mega counties. Those have already been losing population for the past 10 years. Do you really want to stay in New York? That kind of question is going to rise. So that's going to be an interesting dynamic across our state because I see that happening definitely.
Well, thank you so much, Patrick Barkey, for imparting all of your knowledge and information that you have. It was really great to get that update, and we look forward to future updates. Is there a timeline where you think more data will be available, that you got a horizon you're looking at for when we'll have more data on our community?
Well, our next milestone is probably going to be our mid-year update in August. I don't anticipate coming out with another forecast every month. You can see how much that moves around. The only reason why we did the second forecast is just to communicate how fluid everything is. So I think that's going to be a good point to reassess where we are, and of course, hopefully we'll be in Billings. We very much look forward to being in Billings and deliver that in person.
Absolutely. Well, thank you so much. We look forward to touching base with you in August and keeping in touch in the meantime, just about different economic trends that we see. So thank you so much. Thank you all for participating. And of course, you can find Patrick's contact information on the Bureau of Business and Economic Research website and the link that he put up, so you can look at this COVID data and slides if you'd like to take a deeper dive on that. So thank you so much. You were getting a lot of thank yous in the chat box. Thank yous and great jobs. We always appreciate your time and expertise, Patrick. So have a great
great job yourself, Allison. I appreciate it. Thank you.
Yeah. Thanks. All right.
All right.
Bye.